Hello everyone, welcome to Concept. My name is Dharmendra. Today I am going to talk about a very generic topic. Okay, those who want to start trading into stock market, first they understand how stock market works. Okay, what is the criteria? Okay, and also you will see how it works, how you can utilize this opportunity to increase your asset, to increase your wealth. Okay, and how you can generate income, how you can generate profit from the stock market. All right, let's talk about how stock market works. Okay, so please stay in this video till the end. You will find valuable information. Okay, so let's go ahead. Okay, so how do stock market works? Okay, so most of the people, most of us have seen that how stock market works, have seen the news in the stock market. Okay, so the stock market has fell down. Okay, stock market is gearing up for tomorrow. Stock market is soaring high. It has gained the momentum of like 1000 points, 2000 points every time. Okay, so most of us came to know about the stock market in like 2008 crisis. Okay, most of us when we heard about it. Okay, so it has when the New York Stock Exchange crashes down, Wall Street crashes down, and we heard about what is the stock market. Okay, before that many of us didn't know about that. Only the people who are staying in the metro cities, they know about it, but only few of them. Okay, unless we know about some scams, we don't know about how stock market work, because it is really necessary to understand how stock market work and how you can generate your wealth from that particular stock market. Okay, so the topic is how stock market works. Okay, so let me show you. So, okay, so stock market is an organized platform where buyer and seller come together to trade share of publicly listed companies. Okay, listed companies. These markets operate on the principle of supply and demand. See, let's just say a company. Okay, we have various companies, Tata Motors, TCS, Infosys. Okay, they are publicly traded company, publicly listed company, because see, they have generated, means they have taken the amount, they have generated their you can see they have I'm sorry, cut. They have created their money. Okay, they have raised the money to expand their business through the IPOs. Okay, they have raised the money from the public. That is why it is known as publicly listed company. Those who are who want to list their company, want to raise the money from the public, that is known as publicly listed companies. Publicly listed companies, they raise money through IPOs. Okay, so in stock market, it works as an organized platform where buyer and seller come together. See, whenever it is listed in the stock market in exchange, the buyer and seller come together. Okay, who wants to buy, they buy a particular stock, and want to sell, who want to like book their profit, they sell that particular stock and that particular levels. Okay, now here the stock market works on the basis of on the principle of demand and supply. It doesn't work according to my will or any other organization's will. Okay, it works on demand and supply. Whenever there is a demand for that particular stock, the stock will go up. Whenever there is a supply is more, the stock will go down. This is a general concept. Okay, we know about that. All right, when more people want to buy a stock than sell it, the price practically rises. Okay, practically rises, and vice versa. I have explained you right now. Okay, now there are two markets. Okay, primary and secondary market. Okay, now what is primary and secondary market? Okay, first of all, okay, the market facilitated both primary and secondary market. Okay, the primary market is where the new stock are first issued through IPOs. Okay, we have know about the news. Okay, recent news that this company is like going through the IPOs. Okay, they are like offering the IPOs because they want to raise the money from the public. Okay, that is initial public offering. Okay, let's just say the Tata Motors company, it is a private company. Okay, so if I want to expand my business, I need money. So I have two ways. Either I can go with the banks. Okay, to lend the money, or I can go with the public, okay. They will give me the money, I will issue the share to them, okay. So they will become the part of the company by issuance of the share, alright. So here in the primary market, okay, new stocks are first issued through the initial public IPOs, okay. Here companies sell shares directly to the investors and raising the capital for business operation or expansion, okay. Since these shares are in circulation, they enter into the secondary market, alright. Now whenever they enter into the secondary market, initially in the IPOs, okay, if I want to bid for that particular stock or particular company, I can bid from a demat account, okay. Once the bidding is done, the IPO is done, okay, it will be listed on the secondary market. When buyer and seller, they can trade into that particular script, they can buy and sell, alright, they can do both, alright. So once these shares are in circulation, they enter the secondary market where most daily trading occurs. In the secondary market, investor trade existing share among themselves with the company no longer directly involved in this transaction. In IPO, the company is directly involved in the transaction, but in the secondary market, they are no longer involved in that, okay. Here it works on the demand and supply, where buyer will come and seller also come. Whoever want to buy the stock, they will buy. Whoever want to sell the stock, they can sell it, okay. Now let's go with this another part, okay. Now stock exchange, okay. Now see, I want to go ahead with the primary and secondary market, okay, but this market must be provided on a certain platform, okay. It cannot happen at anywhere, okay. So we must need a platform where this market can operate. So it is known as the stock exchange, okay. So stock exchange provides the infrastructure for these trades to take place. That means if I am a buyer, I want to buy a particular stock, I need a medium, okay. So I will go to the broker, okay, but broker will facilitate it. The medium happens to be stock exchange, okay. I can buy that particular stock from the stock exchange itself, okay. If I want to buy the stock, I will place the order through the broker. Stock exchange will receive that order, okay. Once I have bought the stock, it will send the transaction to the depository, okay. They will issue the share from that particular seller, okay. So it will receive from there and it will give it to me. It will be saved in my demat account, okay. So here they maintain orderly market, ensure compliance with regulations and disseminate real time price information. See, the most difficult job is for them, okay, but it has to be done because the market should be regulated, okay. No scam should be happen over there, okay. So that is the stock exchange. They provide orderly market, okay. You can see the bid and ask price, okay, that is the price maintained. There can be no discrepancies in those prices, alright. They comply with the regulations and disseminate real time price information, okay. So real time information need to be provided to people, alright. So the stock exchange provide these kind of services to the investors, to the traders, okay. Now modern stock exchange largely operate electronically with sophisticated computer system matching buy and sell orders almost instantaneously, okay. In the olden days, the buying and selling happens to be on the paper, okay. There was no electronic system. It was happening on the paper, okay. So it takes lot of time, okay. So there was certain cases of discrepancies, but nowadays that discrepancies is almost zero, all right. So this is the importance of stock exchange, all right. Now there are various stock exchange worldwide, okay, various stock exchange worldwide which provide these kind of services, okay. So first one is NYSE, New York Stock Exchange in the US, then LSE, that is London Stock Exchange, okay. NASDAQ, it is also US based stock exchange. In India we have two, alright, NSE and BSE, National Stock Exchange and Bombay Stock Exchange. So most of the companies who want to go for the IPO and after that they will enter into the secondary market. So these are the platforms which provide the services to those publicly listed companies where investor traders come together to invest and to trade in that particular script. Okay. Now participants. All right. See, we have seen about the stock exchanges. All right. We have seen about the companies. Now I want to know about the participants. Okay. So in the participants, various market participants plays important role in functioning of the stock market. Stock market doesn't function by itself. Okay. They need participants. All right. So here you can see individual and institutional investors like mutual funds, pension funds who own shares, traders who want to buy and sell over a short time horizons, market makers and who provide liquidity, and broker who provide facilitate trades. Market makers who provide liquidity, that means like FIs, DIs, they are institutional investors who provide liquidity, and also you can see the companies who want to provide more liquidity, so they go with the split function and it provides the liquidity. That means the differences between the bid and ask price will become thinner. Okay, that is how we know there is much liquidity in that particular script. Okay, so these are the participants. Okay, so there are buyers, there are sellers, there are FIs, there are DIs. Okay, there are companies, there are brokers. Okay, these all are the market participants, because without them it will not function at all. Okay. Additionally, regulatory body oversees market operations to protect investors and maintain market integrity. Okay. See, there are lot of scams, chit fund scams, we have heard about it. Okay. So people should not go for those bogus scams. Okay. People should know about the stock market. It is very well regulated by the SEBI. Okay, it is very well regulated by the stock exchange. I am not saying that it is a regulatory body, but it is a stock exchange job to follow the guidelines provided by the regulatory body SEBI. Okay, so market is well regulated, well maintained. Okay, and integrity is maintained, and real time basis price is over there. So there are little chances for these scams. Okay, so here altogether these elements create complex ecosystem that enables the efficient allocation of capital and provide opportunity for investments and wealth creation. As I have explained you why I am coming to the stock market for investment and wealth creation. See, like let's just say some companies I have studied about them. Okay, some companies I have studied about them, that this company might grow in future. Okay, might grow in future. It is quoting at 100 rupees right now. There is a future for this. Okay, I have forecasted that particular future. What I'll do, I'll bring some amount and invest in that particular stock, and from time to time, if it is grows, my wealth also will grow, my investment will also grow. Okay, so these all are the participants. Okay, now why stock market are important? Okay, stock market are integral to modern economies. Okay, today the modern economies, all the because of globalization, all economies are linked together. Okay, so they provide companies with access to capital by allowing them to sell shares to the public. See, on the in the olden days, okay, when I want to raise the capitals to start a business, okay, so what I'll do, I'll go to the bank or some lenders, okay, and they will give me the money and start a business. Okay, now my business is growing. Now I want to do it on the larger scale, because I have seen there are much potential in the market to grow this business. Okay, now in expansion of business, growing business, the benefit is not just with me. Okay, benefit is not just for me, but for the entire economy, for the entire people. See, in the beginning, let's just say I have employed 20 people. Okay, my business turnover is around 1 crore. Okay, now I have seen there are like much potential in the market. Okay, so it is likely that my turnover can go to 100 crore and also goes to 1000 crore. So but to operate on that particular larger level, I need huge amount of money. Okay, so I need to raise the capital. Now, how I can raise that capital? Because bank will not listen to my project, listen to my forecasting patiently, because they will also have limitations. They cannot give you that amount of money. So that amount of money only comes through the public. Okay, and the public want a share of that particular business. Okay, so here what I'll do, I'll offer them my share. Okay, that you will be part of my company. You just give me the money by offering the shares. Now the capital is raised, I can expand my business and I can run my business worldwide. Okay, so this is how stock market are integral. This is how it provide access to capital by allowing them to sell to the sell share to the public. Okay, enabling business to fund growth, innovation and expansion. Now the influx of capital received from IPOs derives economic development. As I have said, okay, IPO is not only for just particular business, IPO is for whole economy, whole people, because by expansion of the business, it will generate lot of opportunity, it will generate lot of employment to the people. The whole economy will revolve around that particular company. Okay, so you can say it will create development, job creation, technological advancement, benefiting society as a whole. Okay, now beyond capital raising, stock market facilitate the efficient allocation of the resources. Okay, so the resource allocation will be efficient, because see here like the information is provided to all investors. Okay, all investors, so they will study whether this particular stock will work or not. Okay, and according to that I will work, according to that I will see whether I need to invest in this or not. Okay, see the capital is lying with all the people, and if I am going with the IPO, it will help me for the resource allocation. Okay, so efficient allocation of resources, they do this through the price discovery process, where the price of the stocks are determined in real time by collective action of buyer and seller. See here the price are not manipulated. Okay, let's just say if you are going in the rural area or maybe some other area where you want to buy a piece of land. Okay, so what will happen, let's just say they get to know that you have huge amount of money, so they will raise the they will just increase the demand, they will raise the price from 1 crore to 1 crore 50 lakh or maybe 2 crore. They will say he have huge amount of money, so he will definitely buy that particular piece of land. Okay, so they will just demand, and once they understand your need, when they understand your urge to buy, okay, so they will increase that particular price. So that is a scam. Okay, stock market doesn't allow that. Okay, it will give you the price determined by the real time. Okay, real time data provided by the actions of buyers and sellers. All right, now here this mechanism helps to ensure that capital is directed towards most promising and productive enterprise. Okay, and also through the buying and selling signal which companies they will believe will succeed, grow, and which may not. Okay, so through buying and selling also itself we know that whether this company will grow or not. All right, now this dynamic process helps allocate resources to the most efficient uses and promoting overall economic efficiency. For investors, stock market provide opportunities to grow wealth over time. See, I have invested in that particular company. If company grows, okay, my value will also grow. I mean, my value, my investment value will also grow. My wealth will be created. Okay. So, by purchasing, institutions can participate in the financial success of companies, potential earning returns through the capital appreciation and dividends. Okay, so capital appreciation and dividends also. See what is dividends? See, most of the companies they generate huge amount of profit. Okay, if they don't have the plan for the further expansion, what they do, they just declare the dividends, and those dividends are divided to the divided and distributed to the shareholder. Okay, so being part of the company as a shareholder, I will receive that dividend, so that will become my income. So most of the public sector units, okay, They declared dividend every year and they get money every year. Okay. So if I am holding stocks of public related PSUs, that is public sector units, that is controlled by the government, it declares a dividend, so I will get the regular amount of income. Okay. Now, access to the market allows a broad range of people to find financial security and work toward long term goals such as retirement or education funding. See, like I am investing into that, okay, it also act as a retirement fund for me, also for the education of my kids, okay, because see, every time due to inflation, whether it is a healthy inflation or not, okay, the price will rise in the future, okay. So it will help me for to create to raise the fund for education purpose also and for my retirement also, okay, because the stock market is accessible to everyone. It is not accessible to only particular people, it is accessible to everyone, okay. Today many individuals rely on stock market investment to fund future goals such as retirement saving, college tuitions and even healthcare spending, okay. Now moving ahead, okay, choose your investment strategy, okay. Now investment strategy is very important. Why I am doing the investment? It is very important. First is buy and hold. This is a passive strategy, okay. Here it involves purchasing stocks and holding them for a longer period regardless of the market fluctuation, okay. I really don't care about the market fluctuation if I am investing it for the longer duration, okay. Now second one is growth investing, okay. Growth investing focus on finding companies expected to grow at an above average rate compared to the other companies, okay. So most of the growth sector like financial sectors and IT sectors, they grow above the average rate as compared to other companies, okay. Value investing, okay. So value investing means selecting the stock which are undervalued right now, so we can invest in those particular stock and in the future if it is rises, I will get huge amount of profit, okay. Income investing, as I have explained you, it relies on the dividends. That means if I am investing in the stock which declares dividend every year, so it will give me regular income every year, okay. Choose a broker, okay. It is very important to choose a broker, okay. If you want to go with the full time broker, you can go with the banks, okay. They provide full services, all right. If you want to go with the discount broker, like there are companies 0,000, 5 paisa, so they will give you discount broker. That means the brokerage is very less. Also we have online system, okay. Many of the brokers who don't have any physical office that provide the services, okay. So they provide the services on the online basis, okay. Now some people, they don't want to do this investment or trading manually, so they go for the algo system, okay. Algo software, they buy and sell and they invest on the basis of the algorithm put into it, okay, according to the strategies, and that is how I do investing and trading, okay. Now monitor and adjust your investment. It is very important to monitor and adjust your investment, because see at every point of time might be that company is not performing well due to some competitions, due to some regulatory requirement, okay. So we need to exit from that particular stock and enter into or buy some other stock which has future potentials, okay. So regular monitoring and investment is essential so that they align with your goals, okay. Over time market conditions and personal circumstances changes every time, okay. So your portfolio may need rebalancing. Rebalancing involves adjusting your portfolio back to its original asset allocation by buying and selling investment, okay. This helps to maintain a desired level of risk and ensure that your investment strategy remains on the track, okay. So this is all about how stock market works, okay. I hope you like this video. I hope you find my content valuable, okay. If you like this video, please like and share. If you want to know about the concept tool, you can call on the number mentioned above. This is Dharmendra Rajbhar. Thank you very much.